Hi, everyone. Today, let's talk about Snowflake. Snowflake is a cloud computing and cloud storage company. They focus on storing large amounts of business data and allowing these companies to run massive computational loads in a short period of time, allowing them to be more efficient with their business. Then I will go over a few articles about the company, and they are pretty bearish. The second article that I will go over is about the IPO lockup, which is set to expire on December 16th. Then I will go over some of the charting as well as my current option position in Snowflake. If you like trading stocks and options and making money, definitely like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. So Snowflake is another player in the cloud computing industry, which seems to be one of the hottest industries in terms of price per share and projections on future growth. They highly emphasize their data structure with multi-cluster shared data architecture, global data solutions, and secure collaboration. Meaning if you have massive amounts of data that takes days to run, potentially, you can put that data into these architectures and run them in fractions of the time. This allows massive companies that have lots of money to spend on data and need to do so to optimize their sales. It provides them a data solution and allows them to collaborate with multiple sections within their company or even across corporations. They want you to put all of your data on a single platform, so they provide data engineering, data lake, which is your total data warehousing, so you can access individual sections of data without having to utilize the whole portion, data science, which is the analytics piece, somewhat similar to Palantir, which is another company that operates in the cloud computing space. Running applications, these are determined by in-house builders. So if a company has its own applications, it wants to run across a massive set of data, it allows them to do that as well. And then data sharing, something we already talked about. So the idea here is that you have one platform, it's all secured, virtually unlimited scale and performance, and near zero maintenance. This gives companies a lot of flexibility and really cuts down on their computing time, allowing them to optimize their data sets and their reports, making them more efficient and more profitable. Since this is a cloud computing company, they can obviously operate in any sector of the economy, whether it be a financial, government, retail, tech, or advertising. And Snowflake can provide value to every single sector, which makes it a very versatile company and gives it more potential to weather any storm. Be aware that Snowflake is not actually the cloud provider. They run on the back of AWS, Azure, and Google, as these are cloud infrastructures that are already available across 20 regions around the globe, and it allows them to reach their customers much more quickly than designing and building their own cloud infrastructure. And since most companies that use cloud computing already use these cloud infrastructures, Snowflake software can be easily utilized by these companies. However, this does provide a little bit of risk, because if any of these cloud providers decide to increase their prices or change their business model in any way, that will drastically affect Snowflake and Snowflake's ability to service their customers. I briefly want to mention some of the companies that are already using Snowflake. It says here they currently have just over half of the market share and around 2,400 customers. And you can see some of those customers are pretty large. Sony Electronics, Nielsen Business Media, Adobe Systems, Red Bull, Capital One, and the list goes on. So these are not small companies, and they're already using Snowflake. And if they can maintain this kind of market share, it seems reasonable that they will continue to grow their revenue and become a profitable company. Very quickly, I want to show a little bit of a video directly from the Snowflake website about one of their customers and some of the benefits that they were able to provide specifically to this individual customer.
That our legacy data warehouse was performing very slowly. So on a month-end run, just to get it populated would take us about 3 days to populate it. And then we'd have to switch it over and then run our reporting, which would also take another 3 days to run the month-end reporting. Our actuaries were complaining they would start a query on a Friday and come in on Monday and found out that it had failed about 24 hours into it, or else that they came back Monday and it was successful, but they had put the wrong parameters in. So they would have to start over again. Then the other solution was perhaps we could upgrade our software and put more hardware at it. And when we presented that offer to management, it was about $500,000 plus maybe another 6 weeks to 6 months of time.
Just to summarize briefly what he's saying, they have so much data that it takes them approximately 6 days to run the programs that they need, 3 days to populate, and then 3 days to execute. And they don't stay there that whole time. So potentially during that period, there could be a failing. And if it fails, then you have to start all the way over. Or if it was wrong, you have to start over again. And that puts a huge lag into the business process. If you're looking at programs that run across 6 days, which is more than a business week, then obviously it's going to be very difficult to get that system done and then actually execute whatever information was provided by the program. And what he's about to say here is it cut that timeline down extremely and allowed them to be much more efficient.
It took us about 3 days to move our entire data warehouse as is, just move it up to the cloud. And that's another barrier. Once we proved out Snowflake, had it running, compared our existing, we took a set of queries where it took about 28 hours to process collectively. And then we ran the same queries on Snowflake, and it took 13 minutes collectively. So we didn't believe it at first. I thought, we didn't really load the data warehouse. Actually, what happened was we maybe were running against caches that were in MicroStrategy, but that really couldn't be because we had changed some of the parameters. So we looked at it again, and yes, we had really loaded the data. It really was there. And we proved it out a few more times and showed the results to management, but they also didn't believe it at first. They actually were in disbelief, so that was another barrier to getting us to get it. But when we, again, showed them, well, we could do it differently, we could have the 500,000, they went with Snowflake instead. So we still build our warehouse in the same amount of time, but when we now move it to the cloud, it happens in under 2 hours. We can move the whole thing. And as Bob had mentioned earlier, you can query it while it's being loaded. So there's zero downtime on our data warehouse now.
So it cut their process down to 13 minutes from 6 days, which is obviously exceptional, and it makes them significantly more efficient. And he's saying they could actually pull data from the program while it's running, which essentially provides no downtime. So he says it takes 13 minutes, but really they can start pulling data as soon as it's running and providing that information to the users. Obviously, cutting down data analytics from 6 days down to minutes or even real-time data is massively important to companies that have huge data sets, and they will definitely be willing to pay for that benefit. I briefly want to talk about the most recent SEC filing for Snowflake. Be aware that this is not a profitable company right now. They are still running a pretty large loss. You can see here midway through 2020, they reported an operating loss of $171 million, which is down pretty substantially from the second half of 2019, which was $348 million. Some of this could be due to the preparation for going public, which tends to be pretty expensive. But be aware they are still losing more than $100 million, pretty close to $200 million, even during a normal half of the year. Of course, this is not super important as this is a young growth company, and it's expected that they will move into profitability in future years. But that's what makes a company like this an interesting investment. If they do come to fruition, the stock price could be worth much, much more than it is now, but there is certainly some risks. And briefly looking at the Yahoo Finance page, you can see the 1-year estimate here at $300 per share. Current earnings per share is minus $5.11. But the main thing I want to talk about here is their market cap is almost $100 billion. And this is a company that's not profitable. So they are massively, massively valued, and the expectations are very high. But again, this evaluation might not be incorrect if they can continue to generate the kind of growth that they're seeing right now, where they generated around 119% growth year over year in revenue. And you can see that number here at 118.6% quarterly growth year over year, which is obviously a massive figure. And that won't maintain forever, but if they can stay anywhere close to this for a while, this company will be valued at the current market cap. You can see revenue here at around $500 million. If you're growing like this at over 100% growth year over year, starting out at around $500 million revenue, it seems pretty reasonable that they could be profitable in the coming years and that the market cap will be justified. Moving on to some of the bear case here, they say the valuation is insane, with Snowflake being priced at 200 times revenue, which is way higher than Zoom Technologies or Datadog, which is a direct competitor to Snowflake. They say the company is worth around $100 billion and has not even made $1 billion in revenue, which is what we just talked about. They also talk about some shares that are going to be unlocked on December 15th, around 1.3 million shares, which is not a huge number compared to the 50 million shares outstanding. But at the end of December, there's a much larger unlocking of shares, around 37 million shares, which represents nearly a 73% increase. And then 2 days after the quarterly report in March, all insider shares will be unlocked, which is 345 million shares. So the total outstanding shares is going to increase by around 73% by the end of December. But then after that, we will see a 392% increase in the total outstanding shares. So if you plan on trading Snowflake, definitely don't hold this stock moving towards March. You can trade it here in the short term, but I certainly wouldn't buy and hold until after all the shares are unlocked in March. The speculation here is that all of these seed investors and early investors are going to want to liquidate their shares because they've been invested in the company for so long, and with its massive valuation, they would receive a premium for their shares currently, and we could see a pretty large sell-off, potentially below the initial IPO pricing. I also briefly want to mention the fact that Warren Buffett is invested in Snowflake, and we all know that Warren Buffett is a long-term buy and hold kind of investor, and his investment in Snowflake seems to be a bit of confidence in the young company. Looking at the pricing here, you can see it was pretty flat for a while, and then here on November 17th, it started uptrending and went all the way up to over $425 per share from around $220 per share. So the stock basically doubled in a couple of weeks, and then it retraced all the way back down to 305. I believe it was on December 14th. I sold some options. I sold a put credit spread down at 275 to 255. So right here at the yellow line would be my break even. You can see we're well above that right now, and we're starting to see maybe a potential bounce here into the next couple of days, at least until the end of December. I may take this position off before we see that first sell-off at the end of December, which I mentioned, but I definitely won't be holding this into March, and I won't roll it to make sure that I'm not in the markets for Snowflake. And I will keep this on my watch list, potentially going forward, potentially to take a position after March. Looking at my actual position here, you can see the 275 to 55 put credit spread, and I received just over $4 per share for that. And it's currently at a $5 loss right now, which is fine, but we're up a little bit today, and I think this is going to hold out through the end of December and maybe even into January or February. But like I said, I will not be holding this position into March at the very, very latest. After March, though, I am pretty bullish on the stock, and hopefully we'll get a better buying position, but it will depend on where we settle. It seems like there is some support down here at the lows, but like I said, they're going to release 345 million shares, which is a massive increase. And if all of those investors sell off, this stock could be cut in half, and we could see prices much below what we've seen so far. So just to summarize, this is a cloud computing company with really good margins, but they are currently not profitable, and they have a pretty large valuation, and a huge amount of shares will be released in March. And I am not looking to buy and hold this position or trade this position through that release of shares, and I will wait to see a settling formation after all of those shares are released. There is still time for one options trade, but after that, I will wait. Let me know down in the comments section what you think of Snowflake. Are they going to be a huge company, or will they face too much competition? Definitely like and subscribe if you got any value out of this video. Of course, this is not financial advice. This is all for entertainment purposes. And have a great day.